The Federal Reserve just dropped a new bombshell of a report that honestly might make Donald Trump seem right about cutting these interest rates, even though the Fed and Trump have been at odds about when to cut interest rates and when not to. And so Jerome Powell has been holding strong this entire time, saying that, hey, we are not going to cut interest rates. We are going to stay higher for longer. But this new Federal Reserve report makes it seem otherwise. But first, let's start off with Donald Trump, who has demanded a historic rate cut never seen before. So Trump is been shouting from the rooftops and honestly saying all of the names under the sun and calling Jerome Powell everything but good here, and honestly telling Powell to cut interest rates and do it now, do it quickly. Now, the U.S. stock market has actually been performing just about flat, and we'll get into that here in a minute. But Trump is calling for a 300 basis point cut. Now, for those of you who don't have a reference point to all of that, generally speaking, the normal rate cuts are about 25 to 50 basis points, 50 being an extremely large cut. Now we're starting to see Trump call for a 300 point basis cut, which essentially is saying, hey, we want it down 3 whole percentage points when the entire interest rate policy right now, the federal funds rate, is at 4 to 4.25% or 4.25 to 4.5%. So that would literally be 20 or 75% drop just off the jump from one rate cut. So obviously that would never happen, but maybe this is some sort of art of the deal that Trump is trying to do, where he's trying to swing for the fences. And if they do a 50 basis point cut, he'll be satisfied. But the 3% rate cut is extremely, extremely aggressive. And so he's essentially going in there and stirring the pot saying, hey, we need a 300 basis point rate cut at least, because it's way too high. He's saying Powell is costing us billions, costing $360 billion a year in refinancing due to the high interest rates. Powell's reluctance to lower interest rates has already inflicted in nearly $1 trillion in economic losses. So Trump has essentially come out and said, hey, you know what? Powell is always too late. He's been calling him too slow, all of these different names under the sun. But the real kicker here is that the Fed is releasing reports saying the zero lower bound remains a medium-term risk. So now let's dive into what that means, because interest rates and the risk varies over time, driven mainly by expected level of interest rates. At longer forecast horizon, a higher risk of returning to lower bound primarily reflects a higher amount of uncertainty. So currently the perceived risk appears slim over the next few years, but is significant at longer horizons. So what does that mean? That essentially means that the market is looking at these interest rate policies and the amount of chatter going back and forth between Trump and Jerome Powell, and essentially saying, hey, we think that there's going to be a 0% interest rate policy in the near future. So a 0% interest rate policy would mean everything would just skyrocket up, right? Skyrocket in flight. A little afternoon delight there for everybody in the market. So the zero interest rate, 0% interest rate, is a huge issue when it comes to inflation. This is a big reason why we're already seeing a lot of inflationary concerns here, because inflation is not quite under the belt. And then when we see these things already here, the Fed benchmarking late in a holding pattern, that it's above pandemic era levels, and it could still fall sharply in the medium term, leaving the bank with little or no room to lower in its response to hard times. But there's a 1 in 10 chance that interest rates will return to zero over the next 7 years. So Donald Trump would essentially get his way by having these low interest rates. But are low interest rates really a benefit to the economy? I mean, this is what you got to ask yourself. When we have things that are essentially free, low interest rate environments, 0% interest rate environments, even in some cases, negative interest rate environments, well, good ideas don't always prosper. anything could essentially prosper. It's just whatever's marketed the best. So these zero interest rate policies can help inflate assets into the oblivion. The S&P 500, you name it, everything you throw your money at will go up. You know why? Because it is not worth holding your money in a bank account when you can maybe get 0.5% or 0 or 2%, maybe max, if you're getting a high yield savings, and you don't even really have too much access to that. Now, on the flip side of things, everybody will be pouring their money into the S&P 500 or other assets, right? Like Bitcoin or anything else. And you'll see that global liquidity go up and assets generally follow that pattern. And that's what Trump wants to see. Trump wants to see assets increase because he knows that the boomer generation, they look at the health of the economy relative to the S&P 500. Whereas, maybe the millennials are a little bit younger, maybe look at Bitcoin for the health of the economy. And low interest rate environment will make both of those things prosper. So he's really been pushing for it. And now the Fed is coming out and saying that. And most Fed officials see rate cuts coming. I went over this, last week. I haven't done one. As you guys see, I got a little new haircut here. I'm sitting here in Spain. I haven't done a live stream here in a little bit, just simply because I've been running for my life from the bulls. I'm going to have a vlog of that coming out soon. But most Fed officials see rate cuts coming. The opinions vary widely on how many. The Fed officials diverged at June 17th and 18th meeting about how aggressively they would be willing to cut interest rates. Now, see, I think that's important verbiage here. How aggressive? Because they're essentially admitting we are going to cut interest rates this year. We know it's going to happen. It's just a matter of how many and how much, right? So we see that. And we see that the Fed chairs are split between concerns over tariff-fueled inflation and signs of labor market weakness. Now, maybe I'll do a live stream on this later to talk about how Amazon is seeing retail sales fall dramatically. Prime Day was a huge, huge flop this year. But Powell is essentially saying that the Fed would have to cut interest rates this year if it wasn't for the tariffs. Of course, right? This is what everybody's been blaming back and forth is it's because of the tariffs. It's because of the tariffs. But the reality is that the inflationary concerns that Powell has had were well before the tariffs. We see the implementation of these policies and we see the effects of them much later down the line. So blaming these tariffs is not something that should be, really in the cards. Should be something else, right? So Powell says the Fed would have cut rates if it weren't for the tariffs, right? They would have done it already. Sure, whatever you say, Powell. But what are we seeing? Global liquidity drastically going up because everybody around the world is cutting interest rates except for the United States currently. So if we look at the US and we say, hey, what are the percent chances we're going to cut interest rates at the July 30th meeting? That is literally like 20 days from now. Well, it's a 6% chance, 6.7% chance. Those of you that have been following along and watching these live streams know that this is the lowest that we've seen since that June meeting. We've been floating around that 20% mark the entire time. And now we're starting to see this get down to 6.7%, dipping under 10% even. We hadn't seen it under 20% up until this time, up until this stream here. And now we're seeing that fall dramatically. So what has happened in the meantime? We've seen inflation start to run a little rampant. We've seen unemployment, even though it's stagnant, the jobs reports are very mixed. We've had some jobs reports that have been extremely negative, some that have been okay, but nothing, to really write home about. And the signs of consumer weakening just have been persisting over this entire time. And what else are we seeing? Well, we're seeing the Dixie, the strength of the dollar, at 97.8. Look, I know last time I did a stream, it was almost under 97, near 96. But still, this is not the strength of the dollar that you would like to see, right? You want to see the strength of the dollar be over that 100 level mark, because when we're sitting at it at 97, 98, you're seeing that 2% drawdown comparatively to the other fiat currencies. And the dollar is, that the dollar is that basically, right? Is the global reserve currency at this point. But what we're seeing is that it's, potentially showing a lot of signs of weakness. Then we're seeing the S&P 500, the market, right? How is the market going to respond? How is the market going to respond? Well, the market is doing just fine, right? We're up 6% year to date, about average. From the lows, maybe we're up a little bit more than 4%. But I mean, we're starting to see the S&P 500 and everything climb up. And I think a big in part is that the market is forecasting for some big cuts, some historic rate cuts to come soon. They all think that Powell is going to eventually bend the knee, and they think that Trump is eventually going to win. Why? Because, Trump wants the economy to look good for the potential reelection cycle here in the next 2.5 years, right? In the next 2 years, we're going to see, can Republicans hold the House? Is there a lot of other factors here? They want to stay in that power. So what they're going to do is, start to continue to cut to interest rates, try to do everything they can to pump liquidity in the market because of these geopolitical cycles that we're in. So be on the lookout for all that. Make sure you guys are hitting that subscribe button for me. Help me get to that 1,000 subscriber mark because I'm going to be bringing you guys some big updates on what is going on with the Fed, the warning of that risk to hit zero, and much, much more. So hit that like button as well, that subscribe button. Tell a friend to tell a friend, and I will see you guys all at the next one.